Hi everybody, it's Rowan Smith from the Mortgage Center. It's January 2nd right now, and I got a call today from a client who was mystified because their pre-approval that they were told was going to be they were waiting for them by their bank wasn't. So I wanted to clarify what exactly a pre-approval is, as well as what underwriting is in relation to that. So just backing it up, underwriting is the process whereby a bank actually looks at your application. They look at your documents like your job letters. They make sure that all of these details add up, that your pay stubs are in line with what your job letter says, that your down payment is coming from your own resources. And if it isn't, then they have to find out where it is coming from. And based on all of this process, they underwrite and come up with an assessment of risk. Now, this is a time-consuming process, and it's something that the banks spend a lot of money on staff to review paperwork, to review a deal, to work through the numbers and the nuts and bolts of something. So if you're trying to buy a property and you go to your bank and you get a pre-approval, you assume when they give you that piece of paper that it says 265 on it, and you're holding that up to your realtor saying, I've been told I'm pre-approved for a mortgage of 265. But you go and write an offer, and then all of a sudden your banker's telling you, well, you know, actually your job letter didn't say this, that, or another thing, and you may have even provided that job letter up in advance and have been wondering, well, then what was the point of all of this exercise? So what is a pre-approval? A pre-approval is just the lender taking a cursory look at your application as it stands and saying if the documents that you provide us later on, when we review them, because they never review them for a pre-approval. All right, that's our job as brokers, is to review them to make sure your paperwork says what you're telling us it says. Very commonly, what will happen is a client will say, I make $60,000 a year, and they've been on the job for maybe 11 months, and truth be told, we look at their stubs and they're on pace for about $60,000 a year. When we get the job letter, it may show $35,000 a year base salary with bonuses or overtime or commissions or whatnot. And because you've got only 11 months of track record, you won't be able to use that bonus money. You're going to need to use a 2-year average. Now, if you weren't making 60 grand beforehand, you can see how that average could become maybe misrepresentative of your real value, of your real income, but it's what the banks will use when they're trying to qualify you. So, when you get a pre-approval, what differs with me versus perhaps another broker or with your bank is I will underwrite the file. I will look at all of your documentation up front. I'll insist that you provide me with job letters, statements of from your bank account, down payment confirmation, gift letters if it's appropriate, statements from your various credit cards and loans and lines of credit, because I know how the bank is going to look at it, and I can make sure that everything that I provide you, that my pre-approval, when it says 250 or 265, that when you write an offer, the bank actually honors that amount. For the Mortgage Center, I'm Rowan Smith.